the government is having to pay more on a rising deficit. That's obvious. But for regular people, if you're putting a big chunk of your life on plastic and you're being charged 20% interest on that credit card, that right there is a crisis.
The Financial Survival Network. Now more than ever.
And welcome. You are listening to and watching the Financial Survival Network. It's December 18th. Hey, we're finishing up this year in rare style. The Fed has reversed course. What happened? What's going to happen? What does it mean for you? John Rubino is here. If you find him at rubino.substack.com. John, hey, happy Monday. So Powell finally did the unthinkable. We all knew he was going to, but nobody wanted to believe that he would, but he had to, right?
Hey, Kerry. Yeah, it's been a fascinating couple of weeks for the Fed and for gold. And the Fed story is that as recently as December 1st, Powell was out there saying, "Oh yeah, we're not done raising interest rates yet, and there is not even a hint that we're going to start easing." He was talking tight money. And then 2 weeks later, on their December 13th meeting day, he comes out and says, yeah, we're done raising interest rates and we're going to start cutting. We'll cut 3 times at least in 2024. So you know that something happened in that 2-week stretch, and probably what it was a phone call.
Yeah,
from the White House.
From the White House, right?
Yeah,
this is an election year.
Exactly. That's exactly what it was. So they had one of their attack dogs call it, probably the who's that guy who does all the appointments? The chief of staff. The chief of staff probably called him up, said, "Listen, if you want to be part of the the mainstream financial world going forward, you can't be raising interest rates going into an election that we need to win. All right. So you cut rates and you do it dramatically, or else I'll destroy you." That's probably how the conversation went.
Yeah.
And so Powell, good little bureaucrat that he is, said what he said at the meeting. He turned dovish. But now, to complicate the story, a lot of other Fed talking heads are out there kind of rolling that back a little bit and saying what he meant to say was. So who knows what's going to happen? But I think, leaving the White House phone calls and the election and everything aside, we are heading into a recession right now.
For sure.
We had some good macro numbers in the third quarter, and fourth quarter numbers are all terrible. The scariest ones from my point of view are, of course, the government interest costs just spiked from a few $100 billion to $1 trillion, and they're still rising, which means we're running these massive deficits now solely because interest expense is high and rising. And the same thing happened for regular people. I'm not sure what the term is for it. I think it's private interest expense or personal interest expense.
Personal consumption?
No, it's interest
private
expense.
Interest.
Yeah. So basically, in other words, what we're all paying on our car loans and our credit card debt and our student loans and stuff like that, that spiked in the same way. It went from $200 or $300 billion a year to $600 billion a year in the space of 1 year. It just went straight up.
That's amazing.
So those are crisis numbers. That's a death spiral if you look at those charts. And everybody knows that. The Fed, if they know that, which I think they do, has to assume that they're going to have to counter that in some way. And you counter that by lowering interest rates, right? So everybody's interest costs go down, or just flooding the system with money so that everybody has the ability to refinance at lower. I don't know.
Monetizing debt.
Yeah. And basically what that means is QE, of some sort. And so that's going to be the 2024 story, is where something blows up, and it could be related to these debt numbers, or it could be related to commercial real estate or pension funds or insurance companies. There's so many things that can go wrong. One of them goes wrong, and then the Fed has its excuse to start cutting rates again and deal with this interest cost problem. because the interest cost problem might not blow up, but it would reach the point where it's debilitating in
Yeah.
another year, like the last year. So they can't let that happen. So they need an excuse. So, whatever, an excuse will happen.
Yeah.
And
Well,
in
you know what?
2020,
My grandfather had an eighth grade education, but he was smart enough to know. He said, when you're paying interest on interest, you got a problem. And all of society's paying interest on interest, John.
well, yeah, because I mean, obviously the government is having to pay more on a rising deficit. That's obvious. But for regular people, if you're putting a big chunk of your life on plastic and you're being charged 20% interest on that credit card, that right there is a crisis. But then if you have an auto loan that's $700 a month and your student loan just kicked in and it's $500 a month, and you need to put those things on plastic as well because you're just not your three part-time jobs that you cobbled together don't quite cover your rent and all the
Not
rest.
quite.
Yeah. So you've got a scenario in which growing numbers of people are going to go bankrupt. And there's your crisis. If personal bankruptcies spike, then consumer spending craters, and the economy is 70% consumer spending. So you've got the circumstances in which the Fed panics and starts easing again. So I think that's next year. I think that's what happens in 2024.
I think you're right. But it was really interesting what happened to gold that day once he muttered the dovish line. Gold just instantly spiked.
Yeah, well, the gold story has been really interesting too, because even predating the Fed saying what it said, gold has been banging its head on the 2000 resistance level over and over again. It's three times in the last 3 years, and then we had a fourth just now. And then so when the Fed started easing or started talking about easing, gold spiked and it went all the way up in overnight trading to like 2175 or something
Yeah,
like
it's
that.
unbelievable.
Yeah, it was a straight up $60 move in the after, 4 o'clock in the morning or whatever. And then it got smacked back down. So 20 or 2000 was once again resistance, and gold was back in the 1900s. Then it jumped up again and breached 2000, and now it's, I think, 2030 as we're speaking. So the question is that the last attempt to breach 2000 before it keeps on going, and then 2000 becomes support rather than resistance? And we'll see. I mean, I think at some point that was going to happen because gold was soaking up all the potential sales at 2000.
Yeah.
Everybody that wanted to take profits and were willing to sell at that big number. So it could be that the conditions are ripe now for gold's next leg because, first of all, seasonality is favorable. We've talked about that before. Second, the Fed is talking about easing, and Incrementum puts out a really good chart that shows what happened the last three times the Fed stopped raising interest rates. And each of those times, gold immediately embarked on a nice run. So if the fourth time is like the previous three times, we got at least a 50% increase in the gold price coming.
I wouldn't doubt it. No.
Yeah.
I wouldn't doubt it at all because Martin Armstrong, one of our regulars, always says that gold goes up when confidence in the system goes down. And can you think of a time when confidence has been lower than it is now, John?
Oh, the establishment has blown it on such a multifaceted level. Start with the pandemic, which we don't have to go into, but suffice it to say that nobody trusts the public health system anymore.
Yeah.
And that was a big system that everybody used to trust. That was one of the few things, the CDC, look at any disaster movie. The CDC guys are the good guys. They're the ones who come in and try to fix things because they're honest and they're competent. No longer. Now they're just a bunch of clowns in most people's opinion. Okay, so
I trust Dr. Fraudchi.
Yeah, you trust him to be himself, which is a different thing than actually trusting him.
Oh my God.
But so anyhow, that's one thing, and then geopolitics. We're just a huge mess overseas, the U.S. military industrial complex. people get that. And, people never really trusted the big banks after
No.
2008, 2009. And then the current government, what can we say, is just inherently trustworthy or untrustworthy. They're just this is not a good government. So anyhow, all of that stuff is happening. And like Martin Armstrong says, the less you trust the broader world, the more you want safe haven assets to protect you from the clear mismanagement.
Mm-hmm.
Oh, okay, and the monetary system too. We had double-digit inflation
teetering
in 2022. That terrified people. So nobody trusts.
It's still like we were talking about pre-call, is the banks are still increasing the rate at which they're doing the emergency borrowing from the emergency discount window, right?
Yeah, yeah. The local and regional banking sector is in crisis right now. A few of them failed and were bailed out, but going forward, the rest of them have massive unrealized losses from their bond portfolio from when interest rates went up, which makes bond prices go down. They're carrying all kinds of commercial real estate paper, and commercial real estate might be the domino that knocks everything else down. That's a sector in crisis, and depositors are pulling out a lot of money. So the government fund that you just mentioned is basically to allow local and regional banks to use government money to pay back their depositors when the depositors leave to go to a money market fund or whatever. So that doesn't force the local and regional banks to to sell their bonds, which are underwater, in order to pay back depositors, because then they would have to report those losses instead of just having them be notional. So if they had to report those losses, that would terrify everybody. The depositors would completely leave, and all those banks, 3,000 or however many there are, would go bust, and they can't have that. So, so the government is basically papering over that banking crisis, and they've used what, $1 trillion of taxpayer money right now to do that, and it's still rising. So there's no way to know where that ends, especially if there's any kind of another crisis. Let something else happen out there, and all of a sudden people will get even more paranoid about their banks. And anyhow, it's all happening.
When something happens,
Yeah.
it's gonna happen, and it's just there's no confidence left there, and even though the thing that I found distressing about gold being up is that the mining stocks are shot. I mean, they're in like a major, major depression. We've all lost money at them for sure. And, now we got this article you mentioned in Kitco saying that the junior miner capital market is kind of kaputski.
Yeah. What normally happens at the trough of a cycle is of a precious metal cycle is that people lose faith in an increasing price of gold going forward, and that leads them to not want to be invested in the miners that are basically leveraged bets on gold. If you think gold is going to be flat or go down, you don't want to buy a leveraged bet on it, and so the miners are really suffering lately. Now, the junior miners and the explorers are suffering especially badly because they don't generate much cash flow, or any cash flow in the case of the explorers. They consume cash. And nobody wants to lend them money right now. Yeah, yeah. So a lot of them are existentially threatened by having no funding for the next 2 years, because at some point they've got to be able to borrow in order to keep drilling, in order to stay a going concern. And if they can't do that, then they're out of business. So a lot of junior miners are liable to die pretty soon here. Now, this means a couple of things. Means it's tough times for the junior miners, although that could be alleviated in a heartbeat by gold going to, say, $2,200 an ounce. All of a sudden, all those preliminary economic assessments and things like that from the gold miners suddenly look really attractive when they based the last numbers that they put out on $1,800 gold. Now gold is at $2,200. All of a sudden, they make a lot of money in their,
Yeah, a
mining
lot.
scenario and everything. So that would solve the problem for the junior miners. And the other thing is that junior miners' problems are royalty companies' opportunities.
Yeah.
So royalty companies are out there cutting really stringent deals, really favorable deals with the exploration companies that have nowhere else to go. So in the next upcycle, when gold goes from 2,200 to 3,500, let's say, in the next cycle, which is my official prediction, that means that the deals cut today by the royalty companies will generate a torrent of cash flow because gold will be going up. Gold and silver will both be way above
Hmm.
the numbers they used to justify the deal. And that makes the royalty companies look really interesting right now because they're profitable at today's gold prices, but incredibly profitable at 20% higher prices. So if we get another 50% increase, which is what the last 3 times around when the Fed stopped raising interest rates brought to gold, that means the royalty companies are super profitable and really
Oh yeah.
attractive. And the exploration companies are lottery tickets. The ones that work out operationally are 10 baggers. And so you want to own the best of them too. If you just had a portfolio of royalty companies and high quality explorers, that's a high risk portfolio, but a potentially life changing one because that whole portfolio could be a 5 bagger, maybe a 10
Easy.
bagger. Yeah,
Easy.
and when your entire portfolio is a 10 bagger, you have made life changing money, and that's the kind of thing that's out
So
there
true.
potentially.
So true. Hey, well, like in the meantime, the political environment for miners keeps getting worse, especially in South America, south of the border. Mexico seems to be exempt thus far, but there's a situation in Panama with shutting down a couple of mines. You know, a lot of countries are putting up obstacles to miners.
Yeah, well, in Niger or Niger, depending on how you pronounce it, there was a coup that imperiled a major uranium mine. Then Chile decided to nationalize their lithium deposits, and Mexico actually did. They changed the law governing how miners are taxed and everything. It
Yeah,
wasn't horrible, but it did
they're
help
expecting it to be
Mexico.
struck down.
Yeah,
They're not
yeah.
expecting it to hold up under the new government that's coming in,
Yeah, and
but who knows?
but it still adds to the uncertainty that somebody like Mexico would do something like that because that's a high
Hmm.
quality jurisdiction.
Yeah,
And then the thing in Panama, they had one of the biggest copper mines in the world operating there that accounted for 4 or 5% of the
hmm,
Panamanian government's revenues. It was a big deal in
yeah.
context. And it got a lot of environmental protests. Copper mines they're big intrusive things. So I understand the environmental issues. But the government just decided to shut the mine down. There's more to the story, but the
Yeah,
gist of it is
obviously.
the mine is shutting down. Now, the First Quantum is the miner that owns
Right.
that mine, and that was an existentially threatening hit for them. That was one of their big mines, and it's just boom, done. But also, Franco-Nevada had a big stake, a big royalty agreement
Loyalty.
with that
Yeah.
mine, and they took a big hit from that too. Probably too big of a hit. I think it's all in the price and then some now. So that might be a kind of a value play at this point,
They're
Franco-Nevada.
diversified. That's the whole point of these royalty streamers.
Yeah,
They have streams, so many streams from so many different projects all over the world
yeah,
that they're able to take these hits when they happen, or that the mine never makes it to fruition, never becomes a producer. So, as long as they don't get too many of these, they'll be okay. But
yeah.
I'm sure it was a big source of their revenue. But like say, they're a huge royalty streamer, so they'll find a way around it. But for First Quantum, a whole different story.
So the investment thesis from the geopolitical thing might be that physical commodity ETFs are a lot more attractive than many people thought because what they do is they just go out and buy whatever commodity it is. Uranium, there's one for uranium, one for gold, one for
Sure.
silver, none for copper yet. I think because copper is too cheap per pound.
Yeah.
You'd need a
Copper is
warehouse
going
as
up
big as
in
a
price.
city.
Copper is going up in
Yeah.
price, and it might very well be these nationalizations, because whatever they want to call it, it's a nationalization. It could be that could well be what's driving it now. You know that, John?
Well, yeah, exactly. When the Cobre Panama mine was closed, copper went up because it means the supply of copper will be lower going forward. So with these physical ETFs, they raise money and they go out and take product off the market, which raises the price. So it becomes a kind of a self-perpetuating process. And then they also benefit when any big crisis out there closes down supply because
Right.
their supply is in a warehouse somewhere and it gets more valuable. So I think the greater the political risk, the geopolitical risk becomes, the more attractive physical ETFs become. And
Exactly.
I think they're interesting right now. Maybe so you create a portfolio of royalty companies,
And ETFs, yeah.
those ETFs, those physical ETFs, and then a handful of really high quality explorers for your lottery tickets. And you get basically all the exposure you need to the precious metal sector and commodities in general. So,
Yeah.
the investment thesis is kind of coming together here, where the
I think
portfolio
you're right.
is envisionable. Yeah.
So, and if you're really negative, you sell the miners and buy the ETFs and you arbitrage that play, because maybe it's going to change. It's not what normally happens, like we started this conversation out with, where the companies go down and the metals go up. But the companies have company risk, the metals don't. And so maybe the play is that, yeah, we're going to be buying the metals, whether in form of ETFs or actually physical, because they're going to get even more valuable because the companies do even worse, right? So
Yes.
it's really an arbitrage, and you hold on to a couple of explorers, hoping that there'll be some M&A activity, and that's it.
Well, the explorers, their story is a little bit more complex here because if they're in a good jurisdiction, right? They also become more valuable when the bad jurisdictions really start acting bad. Because if you got a bunch of gold in the ground in, say, Nevada, and a big gold mine in Africa or Latin America gets taken out of operation for some reason, that makes a deposit in a good jurisdiction more valuable. So when you're choosing your lottery ticket explorers, keep that in mind, that if geopolitical risk is part of the equation, then you want to make sure the deposits that you're buying when you buy an explorer, those deposits are in really safe jurisdictions, so they don't get hit by political risk too. Because
Wherever they might be,
yeah,
those
yeah,
jurisdictions.
yeah. You don't know anymore because Canada
The
is
United States.
suddenly not trustworthy anymore. I mean, they're a borderline autocracy now, and the U.S. is just okay. Well, let's just say it. A large number of people in charge in the U.S. are crazy, just
Yeah.
flat out crazy, or like Janet Yellen and a few of their diversity hires, utterly incompetent.
Yeah.
So you can't even guarantee that the U.S. is a safe jurisdiction, but
Look at
relative.
Trilogy. Look at Trilogy up in Alaska. They had the road permit under Trump, and then Biden came in and revoked it,
Yeah, yeah. So
killed
I
the
guess
company.
in terms of jurisdictions, you're talking relatively safe, not objectively safe now. So you lower your risk by choosing the U.S. and Canada and Mexico, but you don't eliminate geopolitical risk at all. So maybe we should just come back to the physical ETFs here. I'm starting to convince
Hey,
myself that that's all I want to own at this point.
Todd, what has
Um,
happened to the United States? There was a time when if they threatened to seize banana plantations, we'd send in the battleships. And now they like take mines, they shut them down, they do all this stuff, and the United States sits around and does nothing here. You know,
Well,
what happened to
I
where is gunboat diplomacy when we need it?
yeah, okay, if they only did it for gold mines and copper mines, I might be on board,
Oh,
but we
they
can't
did
let
in remember Chile, right? Salvador Allende, just
yeah.
ITT just staged a coup. It's actually a funny spoof movie about it called Head Office with Eddie Albert and Judge Reinhold, and they literally are having a coup in their company headquarters because the government of whatever South American country that they want kicked out is there visiting, and they're having a revolution in their headquarters.
Oh, geez. Well, you know, not that I would eliminate that as a possibility, the US going in and invading a bunch of new countries, but I think we're past the point where we actually have the power to do that because, if we start invading other
Yeah,
countries, everybody joins the BRICS coalition.
bad
Once everybody
PR.
starts thinking, who's next? Could it be me? Well, I better go make an alliance with Russia and Saudi
Well,
Arabia,
that,
Yeah.
well, you've been reading about the Belt and Road Initiative, what a
Mhm.
failure that's turned into, that China's like wasted $1.5 trillion trying to buy off all these countries and put them into debt traps. And then Italy withdrew. They were the only G7 country in the Belt and Road Initiative. They withdrew. And now you have countries that are just like rebelling against, in Ecuador, they built a dam, except the problem is that the dam is like crumbling before their eyes, and they're going to have a major tsunami once it collapses. And it just shows like, and then the Chinese would say, we'll give you all this money, but you have to use our companies to build it. And they send 10,000 people in there to go build it and do a lousy job. And it's their policies in shambles, like the country. I mean, yeah, it's madness out there. And the only salvation that many of these countries have is to exploit their natural resources, and yet they're doing the opposite, John. And it's a totally self-destructive path that's going to lead to disaster for these countries. I mean, the Panama Canal is Panama's biggest money source, except it's problematical because it's drying up. The levels are going down.
Yeah, it's hard to look around the world and find an example of anything that's working anymore.
Yeah,
And I mean, literally Germany. Look at Germany. Germany was the smartest country in the world 10 years ago. People thought,
yeah.
well-run place, labor and management get together. They
Hmm.
export high quality stuff all around the world. They anchor the Eurozone, and single-handedly they've created, and all of a sudden, in the space of 10 years, Germany is the dumbest country in the world. Everything they touch is a catastrophe.
Yeah.
And Japan, Japan is blowing up its financial system. The US used to be much better than we are now, and so yeah,
Yeah.
you can't find examples of excellence anywhere now, and that's
So
pretty
how
scary.
how long can this charade go on? How long can the show go on before everybody discovers that the tide has gone out and everybody was naked? That's really the question. And I don't think we're going to answer it this week, but maybe in 2 weeks we'll answer it, John. Maybe we'll have some more information. In any event, make sure you go over to John's Substack. It's rubino.substack.com. Link is in the show notes. And John, we'll catch up with you in 2 weeks and see what other madness they've got for us.
Okay, thanks, Gary. See you soon.